W.UP is a digital sales company for financial institutions. What we do is we analyze customers' behavior and discover insights and use those insights in digital marketing, in communication interaction, and customer experience. I'm sure you all know this, but just to set the scene really, is a couple of regulatory changes in the market. Open banking we talked about in the morning. Customer expectations are increasing. And of course, the big GAFA firms, technology firms from the States and from China increasingly, coming over to the market and eating into actually the most profitable parts of the banking industry. Origination and sales, this is McKinsey, saying 65% of the banking profit. That's the part which these big tech companies, and of course some of the challenger banks are going after. That's the most profitable part. And of course, with the big tech companies, what we know of them is that they're very good, very, very successful in e-commerce, in selling digitally. You've seen these figures before, I'm pretty sure. Now, on the other side, actually on the customer side, there's quite a lot of people who are very happy to consume and serve and open and buy current accounts in this case, but of course many other digital banking solutions. And more importantly, they expect similar services. What they get from these big tech companies is the personalization. And if you understand personalization, actually 22% of them would be happy to share data to get that personalized experience. Just think of the Googles and the Facebooks and Apples. People are willingly uploading their social profiles so they can get that experience with their friends. People are willingly using and sharing data with Google so they can get the Google experience. And I think what we need to understand is that this is a new type of game. The legacy systems in the banks are not really geared up to provide that sort of real-time effect, that sort of data analysis technology, which allows you to do all this. Partially, because we're looking at, as a bank or as a banking industry, our customers in an incorrect way. The segmentation models are completely broken, we believe, as a company. If you think of how you look at your customers, you look at them age, you look at them life cycle, you look at their income, the total assets they have in the bank, and so on, and so on, and so on. Right? This is the traditional CRM department, segmenting customers, slicing and dicing them, using age-old techniques or age-old strategy. Would you not say, for example, instead of looking at customers like this, that a commuter or online profile, online entertainment profile is a much more predictive way to looking at how customers behave? The sport profile. I'm sure all of you heard the cliche that if you're physically fit, if you exercise, if you do sports, then your body is healthy, right? You're healthy. Now, how many of you thought of the fact that if you actually do sports and exercise, and if you're cautious of your body, does that mean that you're cautious of your financial health as well, rather than just your personal health? Could that mean that? Is there data to prove that? If someone is so conscious of being healthy, then maybe financial health is also very important at that customer. You probably have the data to answer that, but have you looked at it? Or eating out, or someone going out, or having a family profile. To understand all this, or even further going beyond the mobile usage, or how they use digital channels, those statistics are likely to be much better predictive in terms of what products they're going to buy, what behavior they show, than a traditional age, income, or where they live. Okay? Now, if you look at, for example, in some details, one of these profiles which we calculate from the data we have, and that's not just transactional data, but as you could see from the previous slides, it's location data as well, where customers use their cards, also where they move around using their mobile banking solution. The grocery profile actually is built for a customer to understand how they do grocery shopping. Do they go in one big shopping day on in the beginning of the month after salary is transferred, and they do a big shopping where they spend hundreds of euros? Or do they just go every week on a Friday, they go shop for the weekend? What are their favorite brands and merchants? Do they go to Aldi or Carrefour or Spar? Or do they buy small amounts frequently? Right? So this itself creates a kind of customer profile to understand how they behave in that segment in grocery shopping. Now, this is a couple of visualizations I wanted to show you what personalization and what personal services would look like using a mobile banking application in this instance, but it could be also any digital channel. If you look at the interactions here, these widgets or these notifications, the upcoming expenses in March, so the analytics behind it is key, is to actually identify expenses which aren't necessarily standing orders, direct debits. That's easy. Every one of you probably do that. But to look at other type of expenses, and then you still need to pay those and indicate what's actually still outstanding for you to pay until the end of the month. If you have a payment coming up, it's a nice reminder that you've got a £67 Sky bill in the UK. You need to pay that, and what's your balance after that? Or another example is finding out those recurring transactions, those recurring subscriptions, which as a customer you might have forgotten about, but being responsible as a bank, you need to draw attention to the fact that, hey ho, there could be transactions here which you don't want to do every month. You forgot about it, you could cancel it. The financial management part still is to have that predictive capability. Again, here we're talking about the advanced analytics behind it, is to show ahead of time customer the probability of an overdrawn account. And in terms of still budgeting, you could look at the transaction history, you could look at the type of person that customer is. Maybe he's a millennial, and trying to go out on a weekend to go out simply, or to go to a concert, and you can calculate what is your weekend available budget or a free to spend money which you still have, taking into account, of course, the expenses, regular expenses we can discover, and giving a rough idea that if you go out this weekend, you've got £80 to spend. Or even further, going into financial management. I'm sure there are customers, maybe some of them amongst us here, is that where you have an impulse spending, or maybe you just bought something very expensive, which actually affects your financial health in the next 2-3 months. So let's say it's an expensive flight ticket, £1,200. And if the analytical engine behind it understands that this is a serious impact, it's an outlier transaction with that customer, as a bank, nearly real time, or finding out the right time to contact in the bank, would approach the customer with an offer to say that, do you want to spread this cost over 12 months? It would cost you a little bit more, transparently explaining that. But then at the same time, you will not get into a situation that in 2-3 months' time, you have an overdrawn account, because it's an outlier, high spending, high value spending. Similarly, with analytics, you can aggregate transactions and come to a conclusion that this month you went over your budget. This is what Dania was talking about in terms of think, and offer a solution to that. And to the right customer with the relevant message, this works. This is in their interest to see that if you spread the cost of this overspending in February, then you won't get a financial situation where you're again overdrawn, or you need to get a personal loan to cover for that. Just another example using the geolocation as a data source. A case here is that Susie is traveling abroad, and we understand Susie's transaction history, so we understand again Susie's profile, we understand his behavior, and her behavior, sorry, Susie. And then we identify a situation as an analytical engine that Susie normally sets her banking card limit to a higher value when she travels abroad. But she forgot to do that this time, and she's at the airport. We know she's traveling. We know she booked a flight ticket. It's amongst her transactions. We know she's at the airport because we use the location data. So if I know all these nuances, I can actually be very proactive and remind Susie that if you're flying out, you're likely going to incur hotel expenses, restaurants, other expenses. Why don't you set your bank card limit to an already known number, because the engine can calculate what that number should be. Banks would not just be communicating and interacting idly about banking products and finances. We do have a view that with the open banking and the merchant relationships some banks would have, there is opportunity to target and send personalized offers based on behavior. And this example is a sporting profile where Susie, or Katie now, Katie is an avid runner. We know from her transaction history that she regularly spends money in sports stores on running shoes. And we know that Katie actually runs, I keep mixing up these names. Katie actually runs because the mobile banking application is installed on her phone. If she allows the bank to understand location data, to understand device activity, we know Susie indeed is a runner. And for a Nike, this means a lot, because we know that she is not just a customer who says who goes to the gym or who says who goes running, but she actually does. So it's a perfect target market. And then we could offer Susie targeted offers, discounts on merchant stores, which would make Katie a loyal customer. Now, this is just to put the content behind this, is what our engine is, and it's called SalesUp as a product. And ultimately, if the colors would come out right with that project, Manu, I think, commented on that, is that the data collector is, and the two other layers behind or above it is the data universe, is what creates all this magic. This is what gets the data from legacy systems. It enriches it, aggregates it, builds those customer profiles, builds column sets on customers, and then the algorithms would look for these spending behaviors, would look for these life events which customers go through. And if that happens, if that occurs, there's an opportunity to attach that to a campaign, to attach that to an existing campaign manager in the bank, and would then a communication or interaction start with the customer. The technology I mentioned earlier is key, because when we look at existing technologies used in the bank, it's typically not the one Google would use, for example. I mean, how many of you here use a Cassandra database, for example? Hands up. Okay, a couple of those, good. Some of these technologies have been developed to store large amount of data, like location data, for example, or transaction data, and do manipulation, analysis on that large data set in a very, very quick way. When you need to discover something in real time, you need a technology to support that as well. Why we believe is we're a bit different than some of our competitors is because we have a view that in order to really know the customers, in order to really communicate on a personal and relevant manner with them, you need more than just one data source, i.e. transactional data. You need to have a wide data source, which includes the mobile application and the online banking channels as well, how customers interact and use, what function it is, how long, are they frustrated while they're using it. You need data sources which are location, social, typically non-traditional data, third-party data sources. You could think of incorporating data such as house prices in certain areas, if a country has national database, and so on and so on. And this is what will make the picture full in terms of knowing their customer. Now, I promised that I will try to make that or earn that €1 from Paul. So let me tell you a little story before I ask the question again, Paul. Imagine that you, let's say in Amsterdam, you went out with some friends in a restaurant, but the restaurant closes at around 11 o'clock and you've been pretty much kicked out. You had a few pints of beer if you drink, or if wine, if that's what you prefer, right? You're putting that in your head, okay? But you need to leave the restaurant. Everyone else is leaving with you. They all go in different directions, right? It's getting late. Everything around you is closing down as well. So there are no pubs, no restaurants, no coffee shops, nothing open. You pretty much want to just walk to the next train station and get home, okay? There's an urge coming on you, is you need to go to the toilet, okay? You forgot to go in the end. You had a few pints or a few glasses of beer, and you've got that €1 coin on you, right? You're walking. It's a long walk to the station. Your best hope is to find a toilet at the station and relieve yourself, right? Now, you actually luck, because when you get to the station, now you really have to go to the toilet. Then you can see that toilet, but then unfortunately, you've got that barrier in front of it, and it works with a 50 cent. So if someone at that station comes to you with a 50 cent, and you've got that €1 on you, and everything else is closed, would you then do the transaction? Right? You would. So thanks for proving the point. And what I would like to just mention here is that everything else I talked about in the last 10 minutes is to getting to know the customer, getting to know the situation in real time, that Paul is walking to that toilet and he needs to go. Getting to know the little nuances, the story around it, the restaurant that he didn't go to the toilet and he had a few pints of beers, is all this. Translating it into financial services and into banking. If you know the full picture, I just made 50p by knowing the full picture. And I would like to leave you with that thought. Thank you very much.